Now that you've decided to study in the US or Canada, you may need a loan to help cover your expenses. In India, you have many options for a public or private education loan, but you can also get a loan from the US. In fact, Empower Financing is a Washington, D.C.-based company that provides loans to international students, including those from India. Let's go over some important questions to ask any lender under consideration. First, ask if you will need collateral or a cosigner, and if so, what happens if you can't repay the loan? A cosigner is someone who joins the loan application with you and takes over the loan if the student is unable to repay it. Collateral is an item of value a lender can seize from the borrower if they fail to repay the loan. Indian lenders usually require a cosigner or collateral. Empower Financing does not require either. As you compare lenders, ask yourself if taking a loan that requires a cosigner or collateral is worth it, or if you can explore other options that provide you with more independence. Next, check if the loan has a variable or fixed interest rate. If you're considering a variable or floating interest rate loan, ask how a rate increase will impact you. One of two things will happen. When interest rates go up, your monthly loan payment will go up. Or, for some loans based out of India, your repayment period will increase, meaning it will take longer to pay off your loan. Ask what the lender will do if rates go up, and then consider how much extra you would pay in both scenarios. Empower only offers fixed rate loans, so your monthly payment will be the same for the entire life of the loan. Plus, it means it will be predictable during that whole time. Next, ask your lender if they offer a moratorium or partial in-school payments, and if so, how these potential options will impact your monthly payments. During a moratorium, you don't have to make any payments. That might sound good, but keep in mind that a moratorium could increase the total cost of your loan over its life. Empower asks students to kickstart their payments with interest-only payments while in school. You won't start paying on the principal of your loan until 6 months after you graduate. Have you thought about whether you might stay in the US after graduation? If so, ask yourself how your loan will help you build US credit history. Simple, on-time interest payments help build US credit history, giving you access to the US financial system. A loan that's not based out of the US will not help you with your US credit history. Next, ask the lender, what's the total cost of my loan? The total cost is the loan amount plus the interest rate plus any fees you'll have to pay. Be sure to ask about all the fees associated with your loan. Are there fees added to your loan or paid up front? Is there a fee for a loan support letter, the document you'll need to apply for a student visa? Some lenders, for example Empower, will provide this support letter for free. And, very important, are the fees on the approved loan amount or the disbursed amount? You might get approved for a $100,000 loan but only need $50,000. Some lenders will charge a fee based on the larger approved amount. Next, be sure to consider exchange rates and conversion fees. A rupee loan will need to be converted to dollars to pay your school expenses. Forex rates fluctuate, which increase the risk your rupee loan could lose value and not cover all your expenses. And don't forget to add in currency conversion fees. An Empower loan won't be subject to exchange rates or conversion fees. One final question. Does the lender just give a loan, or are they investing in you? Empower wants you to succeed. We offer many helpful resources to customers, including our Path to Success career support throughout your job search. I hope we've helped you as you compare a rupee loan or a US dollar loan. We wish you all the best in your education.